folks, we had the Dow up 23, NASDAQ up 20, S&P's up 4.5. And right now, folks, we get a real treat for you. We have our man, Mr. Graham Briggs. He is the CEO of Harmony Gold, one of the largest gold companies in the world. You've heard him many times on TFNN, and it's a beautiful thing. When we talk about Harmony Gold, you're talking about millions of ounces of gold. Graham happens to be in Florida today at the BMO Mining Conference. And if you are watching this on Tiger TV, folks, or if you happen to be watching on the radio, bottom line is that you'll see right under breaking news, you're going to actually see the presentation as we go through it that Graham gave yesterday at the BMO conference. Graham, welcome back to TFNN.
Hi, Tom. Great to be here. Thank you very much.
Well, I'll tell you, you have to love technology, folks, because what's happening here, which is so cool, is that we are going from Florida to Johannesburg, back to Florida. I mean, isn't it, it's amazing what you can do with technology, but it's really amazing. Let's talk about what you've done with Harmony Gold these past few years.
Tom, yeah, I think, since we spoke, you obviously up to speed with the various changes we've made in Harmony, invested a fair amount of money in capital projects in South Africa, and those assets are starting to produce now and starting to build up. And we're building up from last year 1.3 million ounces. We're hoping to get to 1.9 million ounces in 2015. Mainly from that build-up in South Africa. And then we also have some good interest in Papua New Guinea. Those assets in joint venture with Newcrest, and one of them is just a great copper-gold deposit, and it's got some fantastic grades. So, it's exciting business in the gold mining area. And, of course, BMO is a great place to meet and to talk to other companies, as well as a whole lot of mainly institutional funds, investors, and so on.
Yes. Graham, can you talk a little bit about, your cash operating profit, in a few years here, 4 or 5 years has gone up dramatically. I mean, 43%.
Yeah, of course, Tom, one of your sort of discussions have been in the past about looking at the gold price, and if you're bullish on gold, then you should be bullish on a gold mining company. Furthermore, we are exposed to the Rand exchange rates.
Yes.
So the Rand gold price has been great. Not only the dollar gold price is good, but the Rand gold price has been great. And as our grade improves, of course, our margins will improve. So, 43% cash margin is a great and results in a nice cash operating profits for the last quarter of $257 million. But, more importantly, free cash at the end of it after all the bills are paid. So it's great news after all the investments and capital investments.
Now, when we see as you're going through this presentation, folks, what you'll see is on page 12, you're going to see the underground recovered grade also has gone up dramatically. So how is that because you're just finding? I mean, I guess the bottom line is that it's amazing how many minerals are inside dirt. But is that because you're finding more minerals inside the dirt, or is it expanding out?
No, Tom, this is all part of the plan. This investment that we've made in these new projects, our grade, we're hoping to get to 6 grams a ton by 2015. The year that we're in, we should average somewhere close to 4.8 grams a ton. So still a way to go above that. And, of course, a lot of that comes from newer mines with higher grade ore bodies. So this is part of the plan, and generally this will, of course, counter a lot of the sort of inflationary cost pressures that all mines are subjected to. And so our dollar per ounce should be coming down. We've generally been quite a high dollar per ounce producer, and you can see that on your slide 13, where we indicate in red the dollars per ounce in cash, and then we stack the capital on top of that. But you can see that whole graph, the tendency is coming down both from a cash cost point of view and a total cost point of view. and that means the margin is increasing, and therefore profits are increasing.
Yes. Now, of course, you have, depending on, how long you've been following Harmony, folks, let's talk about your world-class gold, copper, porphyry here. That's the one between Newcrest and the whole rest of the mining world. I mean, I know I've heard you quoted many times on Bloomberg and CNBC that no, you don't want to sell it, and I don't blame you. But let's talk about it a little.
Yeah, Tom, you don't want to sell the best asset you got, and even if you do sell it, you want to try and find a replacement, and there's just not many replacements around like this.
Yes.
Slide 20 gives you a bit of a ranking comparing this asset of Wafi-Golpu to those elsewhere in the world. And certainly some of your investors will recognize some of those deposits from other companies. Grasberg, of course, is the nearest one. That's Freeport in Indonesia, but it's on the same belt as Wafi-Golpu. It's a project that has been growing quite a lot. It's up to just over 1 billion tons at the moment. We're busy in a pre-feasibility study. That'll be finished sometime just after the middle of the year. And we're hoping that we'll actually be able to declare a bigger reserve, certainly a bigger reserve and a bigger resource. It's just a fantastic project. With those sort of grades, Tom, we're dealing with the Golpu deposit is over 1% copper and about 0.7 gold. Collectively, Wafi is more gold and very little copper. And you can see the sort of 1 gram a ton, 1% copper there, and so on. But it's just a fantastic high-grade ore body, and it's certainly a jewel in our crown as well as probably our partners, Newcrest.
Yes. Now, it's pretty amazing when we take Harmony back the last 4 or 5 years. You've gone from basically just having you're having projects pushing out a lot of dirt to basically having newer projects with not only the exploration, but it seems that the going forward, the delivering the longer-term value going forward is the exciting part here.
Yeah, Tom, I think the nature of the whole company has changed a lot. We had many mines in South Africa, relatively small, lower-grade operations. We're sort of aging infrastructure. We've invested a lot in these newer operations in South Africa, now building up in production with higher grades. So we are fortunate that they're now starting to produce some good profits. Our Papua New Guinean ventures have been working very well, and that's an exciting place to do more exploration. So, and of course, with the gold price doing what it is, what great timing. You can't rely on luck, but you can embrace it, especially when the price is looking good like it is.
Yeah, and folks, as you come over to TFNN and you look at this presentation, what you're going to see on one of the slides, which is no doubt remarkable, is the strength of your equity. So that's got to be exciting, right? I mean, because you guys have had a long road here between the rand basically getting so strong that it was harder to really make a lot of money because we knew you had all the gold, but now when you look at the performance of the equity versus the other equities, your performance is pretty incredible.
Yeah, it's good, Tom, in that our performance has been roughly on a par over the last year with that of Goldcorp. Now, Goldcorp is obviously a much bigger company, much bigger market capitalization. Our shares are fairly tightly held by sort of 20 institutions, but we trade very well. And trade both in the Johannesburg Stock Exchange as well as the New York and ADR program. The ADR program is very tradable. Over 2 million shares trade every day, sometimes as much as 3.5. But so very tradable shares. In other words, it's a share and a stock that if shareholders do trade in it, they're not going to get stuck with it. You're going to be easily trading in it. So. And of course, the gold shares do go up. They're quite volatile, go up and down. And people should really understand a little bit about South Africa, about the potential currency difference. But as I say, it's looking good in rand terms. The rand has weakened a little bit, and that's good for us because we sell our product in dollars.
Yes, and folks, let's talk about that a little, because it is amazing, and I've explained to folks dramatically, because I happen to remember when I first got involved in the gold market. It's pushing 12 or 13 years now. The rand dollar was basically at 8 9, and you guys were basically printing money, and that's, folks, when gold was only at 325. And one of the main reasons, folks, is that so you of course, your expenses are in rand dollars, but you get paid in U.S. dollars, right?
Yeah. So most of our costs, Tom, are in rands, and really that sort of slide, if your listeners are on slide 9, then you can see the effect. We've got a little graph there which shows what's happening to the dollar price in red, and then we've got the exchange rate in grey.
Yes.
And the net effect of those two is the bottom graph, so you can actually see what's been happening to the rand gold price. But obviously, most of our costs in rands, and we earn the gold sales in dollars and gets converted to rand via the exchange rate. So we're also a company that doesn't hedge at all, and we don't hedge currency. We don't hedge gold, so our shareholders are fully exposed to these prices.
You know what is amazing? In the gold market, I guess in the gold market in general, there's been a lot of curveballs, and one of those curveballs have been political. How much is in the ground? What has seemed to happen, Graham, is that the biggest curveball that gold companies have got, which you are used to because being in South Africa, was the currency play. Because the Canadian dollar got so strong, those companies got like, oh, what just happened? Where you had experience with that. What is amazing is that when things are getting rough now, people are going to the U.S. dollar and gold, which of course makes the rand cheaper. I mean, did you ever think something like that would happen?
Yeah, it's when the rand has been strong, of course, we've had a few headwinds, but now that it's weakened a little bit, it's great. I think it is very exciting and interesting in an environment where all your costs are in the home currency.
Yes.
And your revenue is in dollars. Obviously, the Australians have a very strong currency. The Canadians are very, very strong and very closely tied, so they don't see that volatility. Whereas a lot of other countries, you do actually get that volatility, but important that your costs have to be in the local currency. So, if you're earning your salary in dollars and working somewhere in a foreign country, then obviously that's not the situation you want to be in. You want to be in a country where we're paying our staff in rands and earning the currency in dollars.
Yeah, no doubt. Well, listen, folks, come over to our website at TFNN, and you got to remember that you can watch us on Tiger TV. You can hit the replay button anytime you'd like. You'll just right under breaking news, you're going to see our Harmony Gold. You'll see the BMO presentation right there. Graham, thank you so much for coming on. Really do appreciate it. You have a safe ride home, a great ride, and of course, we look forward to having you back again.
Thank you very much, Tom. Thanks a lot for having me.
Absolutely. Have a great one. Have a safe one. That's Graham Briggs, folks, CEO of Harmony Gold. You know what's amazing, folks? This is what technology can do, which is absolutely amazing. He just finished the BMO conference. He's at the airport, and in order to when we just hooked that up, what we actually did is that we called his office in South Africa. That went back to Florida. So picture this. I'm on the west coast of Florida. It goes into South Africa, comes back from South Africa, goes to the east coast of Florida, and then, of course, goes out through the United States and through the world from 2 satellites up in the sky. You got to just absolutely love it. You can come over to our website at TFNN. You can see it right under breaking news. And what you want to wrap your head around when you are looking at Harmony Gold is, bottom line is that the Porphyry project, which is one of the largest gold and copper porphyries in the world, And then you also want to wrap your head around what? The good old rand. Because the rand dollar, in correlation of the U.S. dollar, folks, as the U.S. dollar goes up, the rand dollar gets weaker. And that is a situation, as I said with Graham when we were talking about 11 years ago, what you had happening there is that they were the actually strongest stocks in gold stocks out there. The reason being the rand was so weak, and that's when gold was only at $325, folks. Tom O'Brien, this is TFNN. You stay right there. We'll come right back.